This is TV-18 and you're watching CNBC TV-18.
Good evening and welcome to our special coverage of India's biggest tax reform, the goods and services tax. We are just hours away from the much-awaited GST rollout, but India Inc. is now preparing itself for the transition. Our companies across the country GST compliant, and what do you need to do to be GST compliant? To discuss those issues further, we're joined by Vivek Karve, the CFO of Marico, and Harishanker Subramaniam, national leader of Indirect Tax at EY. Gentlemen, appreciate you joining us here on CNBC TV-18. Hari, let me start by asking you, the discussion and the debate over rates is now over. We're just a few hours away from the actual transition and the actual rollout. So let's now talk about compliance. In terms of registration, and let's start with that. What is the current scenario and what do we now move to under the GST?
So, very, very important question, and Sharon, it's critical to understand this. So today, you have service tax, and in service tax, either you can opt for a centralized registration, or you can go multiple registrations. Both the choices are available. Most went on a centralized registration. So that is why service companies today had one single registration. In VAT, wherever you are present in the state where you are making supplies, you are having VAT registrations.
Okay.
And then in excise, you had an excise registration which was factory-wise. What is changing now is that any company which has any operations in a particular state or is making supplies in a particular state will now have to have a GST registration in each state where they operate.
So state-wise registration.
So state-wise registration. So for a services company who hitherto were having only a centralized registration will now have to obtain state-wise registration depending on wherever their business operations or supplies were.
And it's not just state-wise, it's also going to be PAN-based.
PAN-based.
Okay.
PAN is linked to the state registration. So GSTIN registration is a PAN state code linked registration with a unique number for each state. So that is how the whole registration mechanism works. And that is also the reason why initially there was a lot of debate as to whether financial services, telecom and all services company were hoping that they will get a centralized
But there has been no relief on that front because the GST Council has not given way. But just on the registration, Hari, it is optional for intrastate supplies but compulsory for interstate supplies.
Yeah,
right?
because interstate supplies are under supplies. So though they are without consideration, they are considered to be supplies as per the schedule of the law. So you will have to have any stock transfer that you do between the same state, even within the same legal entity, between two registrations in two different states, you will have to have registration in each of those states to effect that supply.
Okay, and it's different for special economic zones?
Special economic zone, the mechanism is for every SEZ there is a registration. So you may just have 3 SEZs in a state, but each SEZ will have to be separately registered.
Okay, so that's as far as the registration process of what changes between now and the 1st of July. We'll talk about invoices and vouchers and how you need to be compliant on invoices and vouchers in just a bit. But let me bring in Mr. Karve. Mr. Karve, thanks very much for joining us. In terms of compliance, where do you see the big challenges and where are you in your readiness for the transition, sir?
Yeah, so thank you. As you know, it's one of the biggest changes the country will ever see. And which means that we will need to equip ourselves in terms of the IT infrastructure, in terms of the business processes, in terms of readiness of all our business partners. So we are readying ourselves on all those fronts, whether it is the ERP system which governs our internal accounting and processes, or it is the system which is primarily the DMS system, which is the distributor management system, which is the backbone of any FMCG company. So as we speak, teams are working day in, day out to prepare ourselves to go live on 1st of July.
You're saying teams are working day and night, and I would imagine it's going to be a long night between today and the 1st of July. But what about distributors, Mr. Karve? What about your vendors? What about your entire ecosystem? If you're working day and night, what is the situation on the ground, sir?
Yeah, so what we are trying to do is we are also trying to receive from all our distributors and all our vendors their GST registration numbers. Because as Hari said earlier, the GST registration number is going to be the most important key for any GST to work going forward. So, and we are quite comfortable today in terms of the registrations that our distributors and vendors have been able to obtain.
Okay, let me now talk, Hari, about what we need to do to be GST compliant when it comes to invoices and vouchers specifically. Let's start with tax invoices. Where do things currently stand and what happens post the GST?
So fundamentally, as far as even the transactions are concerned, there is a big change that is happening as far as GST is concerned. In the current mechanism, whether it's VAT, whether it's service tax, whether it's excise, you provided informations in return which were on an aggregate basis.
Okay.
So basically, if I did sales worth X amount in a month, I gave an aggregated kind of a report as far as compliance was concerned to the authority or the revenue authority. What is changing quite dramatically as far as GSTN is concerned is we are now going to transaction level.
Okay.
For B2B and for majority of the supplies other than which are exempt or other than which are at a value below 2.5 lakhs, you will have to provide a transaction level detail. Okay. Which is where what Vivek mentioned becomes very critical. Your IT system should have the ability to provide those transaction level details for reporting in GST.
Okay. Give us an example, for instance.
So suppose I have a invoice, say, worth 100 rupees, and there are 10 line items in it. I'll have to provide details of those 10 line items because those 10 line items may just have rates which could be different.
Okay.
HSN codes which could be different.
Okay.
So that is the level of invoice reporting that you will have to do in GSTN. Okay. Because the matching that will happen or the keys for matching will be at a transaction level. Yes, there will be a relief in the interim period, and I'll talk about the interim period till September 10th, which is what was announced post the last council meeting, and I'll talk about that as to what is that interim relief. But fundamentally, when you go into full-fledged GST after the interim relief, you will have to report every single supply that you have, whether it's outward, which includes stock transfers, exports, sales, whether it's inward, which includes purchases, again stock transfers inward, or whether it's input service distribution, that is the service credit distribution that you have on GST to your various registrations within the same legal entity, all will have to be reported at a transaction level.
Okay. Mr. Karve, we were just talking about this reporting at a transaction level now. How ready and prepared is the ecosystem in order for you to be able to make this switch over, sir? And what are the challenges that you foresee here?
Yeah, so as far as Marico is concerned, I think we are almost ready. As Hari rightly pointed out, we will have to upload the details at an HSN level. So we are ready with our ERP system. In fact, we are also ready with our distributor management software, because the HSN with reference to which we supply to our distributors is the same HSN with reference to which the distributor will have to supply to the retailer. So our DMS has to support this way of working, and we are ready with that. But one key difference I find here is that in the earlier VAT regime, there was no coupling. What I mean by that is I used to file my return on a standalone basis, my vendor would file a return on a standalone basis, and so will my customer. However, in the GST scenario, it's a highly coupled system. So which means that unless and until there is a matching of the invoices, the input tax credit cannot be taken and it will be denied. So it is high level of interdependence. I need to depend on the maturity of the IT systems of my ecosystem partners, be it distributors or be it vendors, for me to benefit.
Okay, so you're talking about something which is very, very important, and that is the interdependence of the entire ecosystem in order for you to be able to avail of the input tax credits, and hence the matching of invoices that we were discussing is very, very critical. But let's talk about payment vouchers now, Hari, and what happens to payment vouchers under the GST.
Just before I come to payment vouchers, what he said is very critical, and I want to just spend 1 minute on it.
Go ahead.
What it means is that somebody's outward supplies, like Marico's outward supply to his distributors down the line, is the GSTR1. Which means Marico's GSTR1 becomes GSTR2 auto-populated by the GSTN for his distributor.
Okay.
So unless my invoice is not available on the system for somebody to look and take credit, he can't claim credit.
Okay.
So he can claim credit and append an invoice or add an invoice, and there is a 30-day period within which you have to do the correction. But the interdependence is to the extent that there is an automatic matching that you do between you and your receiver of goods. Similarly, between your vendor and yourself. That is a critical change, like Mr. Karve rightly mentioned, because that is a clear change. You know, you're talking of an interdependency for credit matching at your level.
So it's a completely different ball game under the GST, and that's what we're trying to explain here. But on payment vouchers specifically, Hari, what happens now?
So payment vouchers, advances, all are something that you will have to report now into GST. So today you have advances only as far as service tax is concerned. There was never a concept of advance that came in for goods. So the change that will happen is that even advances that you receive for goods will now be subject to GST. Now there just could be a situation that at the time of receiving advances, I may not know what is the nature of supply I will make.
Okay.
And hence I may not know what is the rate that I have to apply. That was an issue that they have addressed by saying that in such a scenario, you treat it as an IGST transaction and you apply 18% rate. And then it gets knocked off when the final supply happens against an adjustment of advance. You know. So those are the changes that are happening even as far as goods are concerned, which today was only applicable as a service tax. Now even on the payment voucher, let's take an example of a recharge voucher or a voucher that you go and buy as a gift voucher. You know.
Yeah.
The concept there is the gift voucher at the time of buying a gift voucher is not when the tax is being paid, because you still don't know what is the kind of redemption that you will do.
That's
then at the time of redemption you will pay tax. So those are all, again the changes that will happen in the regime. You know.
Okay.
So fundamentally, any supply that you make, either for a consideration or without a consideration, you will have to report. So even people who are outside the GST, you will have to still report as far as the purposes of report are concerned if you are partially under GST.
Okay. Mr. Karve, before we let you go, let me ask you, sir, how is life going to change for the consumer come the 1st of July? We've talked about what happens to your back end, what happens at the distributor's back end, what happens at the vendor's back end, but what happens for a consumer come the 1st of July? Are we now clear in terms of Marico, for instance, of what happens with the rate revisions?
Yeah, so I think let me first start at a very macro level. See, the government's intention has always been to keep GST implementation anti-inflationary. So I think they have done a brilliant job. It was a tough task to manage classification of all goods and services within those 4 tax slabs, but I believe they have done a reasonably good job. So far as the end consumer is concerned, who on a daily basis consumes goods, the life should ideally not change. In fact, the life should become better. In some of the categories, there would be a there would be a benefit to the companies, which companies would pass on to the consumers. So I would say that on the whole, GST should be good for a consumer of an FMCG sector, and this should kickstart some demand recovery for the FMCG companies.
Okay, so you're betting on demand recovery because you do believe that at least as far as large parts of the FMCG sector is concerned, we will see prices being revised lower because of the GST, and hence you expect that consumption should pick up. Mr. Karve, appreciate you joining us here on CNBC TV-18 with your thoughts as we count down to the GST. We are going to take a break, but when we return, we are going to take up your queries and get Hari to answer them on how you can be GST compliant. So stay with us. We're back in a moment.
AU Small Finance Bank Limited proposing an initial public offer of equity shares of face value of ₹10 each for cash at a price band of ₹355 to ₹358 per equity share. Offer opens on June 28, 2017. Offer closes on June 30th, 2017. For risk factors and other details, please refer to the red herring prospectus available on the website of SEBI, BRLMs and the stock exchanges.
ब्रो, अब इंडिया हुआ है आइडिया 4G पे हुक. लुक आइडिया 4G पे देखो इंडिया हुआ हुक. लुक खाते हुए पकाते हुए चबाते हुए भगाते हुए पर मचा चूड़ू गारू देखो गुरु. लुक आइडिया 4G पे देखो इंडिया हुआ हुक. लुक इंडिया हो गया है आइडिया 4G पे हुक. आइडिया 4G, इंडिया जितना बड़ा नेटवर्क.
Heavy duty, long lasting, highest selling draw runners. Hetic telescopic channels for your draws. Load capacity 45 kg. Lifetime functional warranty. German quality, Indian price. Hetic fittings, German quality you can trust.
We're presenting to you the concept of pre-activism. driving home the idea of pre-activism.
This wake-up call that we have to start from the family.
स्पोर्ट्स को एक स्कूल से शुरू करना चाहिए, क्योंकि अगर वो स्कूल से शुरू करेंगे तो ग्रास रूट रेबल जो है वो बहुत अच्छा होगा.
Watch the launch of Alarm Bajne Se Pehle Jago Re campaign at this time only on CNBC TV-18.
If you put it in one fund on 1st of January 2003 and leave that fund for 10 years, that 10,000 goes to 1 lakh.
Really?
Yeah. And that's an analysis that's been done. It's historically proved.
Okay.
So that's the whole point. Don't pick and choose.
Lots of companies going through the bankruptcy proceedings are companies which are heavily indebted, might have issued some paper in the market. So purely from a retail investor standpoint, should he or she look at a credit fund at all?
It's a question which every viewer should really be asking their advisors. You have a fixed income fund, I want to know what's the underlying portfolio. You must recognize that when there is higher risk, some of those events will come true. Today, if you take most of the bond funds, the YTM is roughly about 7–7.5%. You're talking about inflation at the current level. You're actually generating fairly good real returns at this point of time.
Welcome back. You're watching our special broadcast here on CNBC TV-18 in partnership with EY India as we address your queries on goods and services tax and how you can comply with the GST come the 1st of July. Our first question that comes into us, under Section 31, an invoice is to be issued for the supply of goods and the bill of supply for exempted items. Currently, traders issue a single invoice. Do they now segregate goods to issue two separate documents? Hari, what would you suggest?
The way I understand what they are asking is, under Section 31, you will have to, the Section 31 under the CGST Act says that you will have to invoice issue two separate kinds of documents. One invoice for taxable supplies and a supply, document for exempted goods. But that is one of the options. The invoice rules also provide, and this is why they're asking is that this may be difficult for smaller MSMEs and retailers to split and make that many invoices. But the invoice rule also provides you an option where within the same invoice rule, a GST invoice can be used both for exempt supplies as a supply document and also as an invoice.
Okay.
So that option is already available. So in an invoice, you could have two kinds of goods. You will only have to segregate the goods and write the HSN and rates separately for each of those goods.
Okay, we may have answered some of these questions, but let's get Hari to revisit some of these issues. Sundry advances are received on the issue of gift cards and cash vouchers. This was something that we were discussing in our first segment as well. How does a retailer account for these, as there is still no clarity on which goods these advances will be used against?
So, like I told you, Shireen, while we were just discussing a few minutes back, when you sell a gift voucher or when you sell a voucher for any shop which could be gifted to somebody else to redeem, at the time of sale of that voucher, you really don't know what is the underlying goods that are likely to be sold. So there is difficulty in applying rate. So the way the situation will work in GST is that at the time of sale of those vouchers, you don't have to pay any GST. The GST kicks in at the time of redemption because then you know what the underlying goods are for you to pay the GST in it.
Okay, so it's at the time that you actually redeem your vouchers or your gift cards, that is when the GST will kick in. Our next question, and this one comes into us as well on Twitter, sale of goods and returns is currently on the same invoice. What is the invoice procedure on the return of goods under the GST, Hari?
So here, the most, I would say, better option that people will have to do, and that's one of the options that will work in most of the cases, is that suppose I sold 5 goods to you and there is one which has been returned for whatever reason. It could be defective, it could be another issue. So you will have to then issue a credit note to that extent, because that's the only way it can work. So any person who's supplying goods is the only person who can either issue a credit note or a debit note. So you'll have to do the adjustment only through a credit note, debit note. And again, those credit note, debit notes, as far as the GST and reporting is concerned, it has to be reported in your returns.
Okay, so that's important. The next question that comes into us is, how do we deal with stock in hand where the GST rate is higher than the VAT rate as the MRP remains constant?
So this is a very, very critical question, and this has connotations even as far as the anti-profiteering is concerned. So what does the law say? The law says any benefit due to change in rate, which is basically reduction in rate, and any benefit due to any efficiency in credit, both needs to be passed on as far as the GST regime is concerned. So let's look at the goods which are in stock. The transition provisions say that in case you have an excise invoice, then you will be able to claim credit of the excise that is embedded in that goods, even in a situation where today excise credit is not available in GST. And the mechanism for that is that, and the mechanism that you can take the entire 100% credit on the basis of excise invoice. Beyond the chain, value chain, where there is no excise invoice, the transition provision says that you will get a deemed credit. The deemed credit are of two types. You will get a 40% deemed credit of the CGST rate or the SGST rate if goods are below the 18% rate category, CGST, SGST combined. And you will get a 60% redemption of the CGST or SGST rate if the goods are beyond 18%. So when you only don't have to look, suppose there are goods in stock, and suppose my goods in stock today is at say 14% and tomorrow my rate has gone up to say 18%. It is not as simplistic to think that the 16 has gone to 18 or the 14 has gone to 18. You will also have to factor in whether you have claimed any excise credit either through the excise invoice or you have claimed any excise credit through the deemed credit.
Okay.
Even that has to be factored in before you decide to change the rate or change the MRP.
Okay.
Now coming to the change of MRP also has another connotation, because MRP labeling is also affected by the Legal Metrology Act. So again in the Legal Metrology Act, reduction in price is easy, but for increase in price you will have to again go and follow the provisions of the Legal Metrology Act.
Okay, so it sounds very, very complex and complicated, and it is going to take time for people to make this switch over. But let me go to question number 7 that's just come in. So this is the 7th question that's come in on the course of the program. How will input credit reversal work on the sale of dutiable and exempted goods, Hari?
So the input credit reversal works on a principle that at the time in when you start the GST regime, say post July, if you want to do input credit reversal, you will basically go by what has been your historical data in the last year, because you don't have any data for the year in which the GST has begun. So suppose from July 1st you have to do input credit reversal, you will have to go by what is the historical data of last financial year and look at what is the input credit reversal on the basis of how much was dutiable goods and how much were exempt goods. So that's the process you will follow. You don't have to do it on a daily basis. You will have to go by the historical record of last year. At the end of the GST period, you will then have time till the September to find what is the actual ratio of exempted and dutiable goods as far as your current year in GST is concerned, and then you will have to do those true up or do those adjustments as per the current exempted and dutiable goods ratio. So at the start you will have to go by the historical record of last year, which you will already have in evidence, and at the end of the GST period for that year in which you are under GST, you will still get a 6-month period to true up if there are any variations as per the current sales that of the current year.
Okay, we have time only for one last question, but do remember we're going to be taking your questions right through the day, today and tomorrow here on CNBC TV-18. But for this show, the last question: how will e-way bills work for the MSME sector? There is still no clarity on the e-way bill mechanism, and the next meeting of the GST Council, hopefully over the next few months, will give us more clarity on this. But specifically for MSMEs, Hari, what's your advice?
So you're very right, Shirin. In the last meeting, GST Council meeting, if you recall, they basically could not come with any consensus on e-way bills. And the statement that they made was, in the interim, they may defer the e-way bills. And if
so whatever is the existing mechanism works.
The existing mechanism that the states have will continue to work, which means the existing forms and entry forms will continue to work. I still don't have full clarity. We still don't have clarity. Will the existing work in the exactly the same manner in today, or will it undergo
That is
change?
what the Revenue Secretary seemed to suggest.
That's
to me
what
when
he
I
was
asked
trying
him
to
this
suggest.
question.
So in my view, the current system will work in all the states the way each of those states are following. And if and when the e-way bill becomes the way forward, then they will probably implement it across the states. The only point of view I had was e-way bill in the current form that has been suggested could be pretty onerous. I really hope they look at it and try and make it more business friendly.
Okay, so e-way bills, whatever is the existing mechanism, the existing state mechanism, that will continue till the time that the GST Council arrives at a final decision on the way forward, which according to the Revenue Secretary could take about 3 months or so. But Hari, before we let you go, we are well and truly just hours away now. The 2 or 3 things that people must keep in mind come the 1st of July.
No, the first and foremost is that, I like Mr. Karve said, I know of many companies who are going to spend the next 48 hours in the office, And to me, one of the biggest things that the industry and the entire ecosystem will have to really take care of is the cutover. Cutover means transition stocks, transition goods, the transition returns, the IT system cutover, the testing of the IT systems, because the moment you switch on to 1st July, you will have to comply with the law and comply with the rules in GST. So the entire focus now as far as the industry is concerned is not the rates, not the other areas, but primarily what do they do as a strategy for cutover so that they have minimum disruption and they can start invoicing and start sending goods or providing services on July 1st.
Well, we hope that we've certainly helped you address some of the queries that you may have had in terms of GST compliance. Remember, this is just the first. We will continue to be your GST helpline. But for now, many, many thanks from all of us here on CNBC TV-18 and EY for watching.
ब्रो, अब इंडिया में लोग मक्खी नहीं मारेंगे क्योंकि इंडिया हुआ है आइडिया 4G पे होक। लुक आइडिया 4G पे देखो इंडिया हुआ हुक। लुक अरे चेन्नई में मूड किया दिल्ली की चाट का, जयपुर में दर्शन हुआ शिरडी के संत का। डेटिंग में लुक, वेटिंग में लुक खाते हुए पकाते हुए चबाते हुए भगाते हुए पारू मचा चूड़ू गारू देखो गुरु। लुक आइडिया 4G पे देखो इंडिया हुआ हुक। लुक
इंडिया हो गया है आइडिया 4G पे हुक। लुक आइडिया 4G, इंडिया जितना बड़ा नेटवर्क।
As India gears up for GST, the nation's biggest ever tax reform.
So while we've tried to reform a little, we've made sure that some social and economic realities of India are borne in mind.
CNBC TV-18, India's #1 business destination, brings you a point-by-point analysis of how it will impact every Indian's life, covering every nuance. As the architects of GST break it down for you.
It is a kind of a rare shastra जो कि last में use होता है. In a way, it is a brahmastra only.
Big play today was to what degree we, the GST Council, will facilitate job creation in India from the states of this country.
And India Inc.'s